on the Toronto Venture Exchange.
Welcome back to Business Day. Just to keep you up to date on the tally on the TSX, we're down about 222 points at the moment. That's the second steepest decline of the year, and Canadian stocks are getting caught in that commodity sell-off downdraft. Let's go down the street to the TSX. Diana Avigdor is joining us now, portfolio manager and head of trading at Barometer Capital. Diana, good to have you on the program.
Thank you.
What is going on?
Oh, wow. So lots of volatility. But I'll start with this. Let's just talk about what is as opposed to the why, and then we can talk about what may have triggered it. What is that last week we had a big sell-off. We've had silver margins rising, and the whole commodity complex was vulnerable. The CRB had a over 900 beep week. That's very, very big. I don't think we've seen that since 2008. So coming into this week, I think people wanted to see a relief rally. They wanted to see that things are okay, and it was just over-exaggerated last week. But that didn't happen. So selling begets selling. And as things are breaking, and copper broke below 200-day moving average, and oil was not able to rally past its previous high, it just feels like people want to take some profits, and they're sitting on a lot of profits. So then, now, perhaps maybe the why. Margins have gone up. Clearly, somebody out there is trying to perhaps take out the speculative froth out of a commodity market that has rallied a lot. So, you know, that probably affects those short-term traders that have used their profits in the form of increase of freed up margins to buy more and more product. They have to delever. So in that way, it kind of cascades, and selling begets selling.
I suppose as well, Diana, you could paint the picture that accelerated inflation data from China, Germany, the United Kingdom, and elsewhere also sort of reminds us of policymakers and their task, which is going to become more difficult as the months continue.
That's true, too. That's a very good point. We had some data coming out of China, and people were talking about an article this morning that a Chinese official was talking about they may have to lower rates now that things have slowed. Retail sales were a little lower than expected. Industrial production was a little lower. CPI was lower. So, you know, they have raised rates 4 times since October, and, you know, perhaps it's starting to take place now, the effect of it. So when it's slowing down a little bit, be careful what you wish for. Kind of burst a bubble in an already vulnerable and fearful commodity market.
Diana, what is your opinion about the level of speculation in commodity markets and what sort of influence they're having on prices?
Look, in all asset classes in the last, call it 5 years, we've had a hugely increased participation on behalf of all types of investors, short-term, medium-term, long-term. It has become, through the use of ETFs and even direct exposure through the futures market, so many CFDs, people of all asset size can now trade short-term and have access to all markets that previously only professional money managers had access to. So what happens is you have lots of more players that are not necessarily strong hands, what we call them. So also have a lower risk tolerance of a shorter nature. So I do think that a lot of the extreme levels are brought on by a lot of speculation and just going with the trend and try to have a short-term trade on. And when that doesn't work, they're very quick to get out of those trades, as opposed to more professional analysts and money managers that are in there for a fundamental longer-term view. Now, that's not to say that we are an active manager, and we actively manage our clients' portfolios. We won't stay in a stock that doesn't work, or in an area that doesn't work. We have no emotion about that, and we're very, very disciplined with our losses. So I'm not saying active management is what's important, but we have really, really short-term and little trade that do participate in the market these days. Just look at the volume in the ETF side.
Yeah, no question about it. I mean, that's an excellent point, how much new money is involved in the commodity complex over the last 5 years. But Diana, let me ask you this. Do you get the sense that Canadian stocks, particularly those in the resource and energy sectors, are influenced in performance by whatever speculative money is pushing commodities? Or do you think that the value still exists even if the commodities were to take away some of that speculative froth that you just described?
Fundamental value will remain. That being said, you may believe that you have a stock that is going to do well in the next, I don't know how many years your time horizon is, but you know, if there is something else that's working now, why would you want to stay being a hoper for the next 3 years when you have sectors that are actually can mitigate some of that risk? Or you know, there definitely has been rotation lately in the last few weeks, and you've seen the telecoms in Canada. You've seen Bell. I think new 52-week high, TELUS. You have a yield play there, you know, for people that are still searching for yield. There is, you know, at least 2%, well, probably around 2 percentage points higher than the financials, which are due to report coming up soon, and that's probably a catalyst that people should be looking at.
Diana, just briefly, let me ask you this question. Are Canadian stocks still considered a respectable inflation hedge in this kind of environment, given that the broader benchmark performance is so linked to commodity and resource growth?
I think it's a very volatile, for the foreign investor, I think Canada is a risk-on, risk-off trade.
Yeah, that certainly appears in the foreign exchange markets. It's bleeding into stocks as well. Diana, we're so grateful for your perspective today. Thanks once again for joining us.
Thanks for having me.
No problem. Diana Avigdor joining us just now, portfolio manager and head of trading at Barometer Capital. She was down the street at the TSX. That's exactly the kind of perspective we need on a day like that. Someone with chips on the table who understands the flow and the dynamics of what's going on. We're grateful for that, for sure. We'll talk about bonds as well when we get back. We certainly can't ignore the fixed income portion of the portfolio. Big changes anticipated in the summertime. The traders seem to be leading up to them. We'll talk about the reaction when we get back.